President Biden raising tariffs on several Chinese imports, including chips. Now, chips are going to be subject to a 50% tariff rate starting in 2025, double currently, which is 25% tariff. So what could this mean for the broader escalation of the chip war that's playing out between the U.S. and China, and who stands to have the most to lose? For that, we want to bring in Stacy Rasgon, Bernstein Managing Director and Senior Analyst. Stacy, it's great to have you here. So talk to me just about this broader escalation. You brought it up in your notes that it's one of the things that's on your radar here as we get news of the tariffs today. So what exactly does that mean then for the larger chip sector?
I mean, to be fair, this has been going on for years and years, ever since the Trump administration. I think the first trade tariffs on chips, as well as lots of other stuff, when was it? It was 2018, I think. So it's been quite a while we've been looking at this. There were export controls and Commerce Department restrictions that were put on things over the years. The U.S. put Chinese companies like Huawei and others on the entity list, which made it very difficult for them to do business with U.S. companies. So it's not like this is a new thing. Right? This has been going on for like many, many years at this point.
Right. And so, Stacy, it also comes back to what's exported here. And I think you started to get at that in your answer. Is it clear right now? Because, I mean, we're taking a look, and we were taking a look in our morning meeting at some of the companies that have the largest outsized revenue exposure to China here, and Intel, Applied Materials, Texas Instruments.
You need to be a little careful with this. Number one, I think the tariffs he's talking about are not exports; those are imports. From China into the U.S. And I notice you're right. It's going on from semiconductors from 25% to 50%. The U.S. actually imports very, very little in the amount in terms of like raw semiconductors from China. Last time I looked at this was again from 2017, but even then, the U.S. imported less than $10 billion of raw semiconductors from China into the U.S. Today, it's likely lower because of the nature of some of these controls that have been put on over the years. But in the context of a semiconductor industry that's over $500 billion, it's a drop in the bucket. You have to remember, most semiconductors travel between the U.S. and China inside other things. Rather than chips, they come here inside smartphones and PCs and TVs and that sort of thing. You were talking about a revenue exposure. You need to be a little careful there as well. Most semiconductor companies will have an outsized reported revenue exposure to China. That's because the electronics are assembled in China. So, for example, if a company's selling stuff to Apple, all of that revenue will show up as China revenue, likely because the iPhones were assembled in China, whether or not those iPhones are actually consumed in China or not. So you have to be a little careful when you're just looking at the raw reported numbers.
Certainly, and that's what we were trying to get at. That's what we were trying to clarify at the end of the day. So for investors who are trying to figure out exactly if there is a significant delta or if there is a change in operations at all here.
The direct impact from raised tariffs on semiconductors is likely very little. And again, that's like the reason I alluded to earlier. The U.S. just doesn't import a lot of direct semiconductors from China. They just don't. It's maybe a few $1 billion. It's not any more than that. So there's no direct impact. Now the indirect impact, again, risks of further escalation, like counter actions from China, things. I don't know. Those have been the issues that we've been dealing with over the last several years. By and large, they have been manageable. I remember going back a few years ago, people were very worried about the escalation of all this stuff, trade and tariffs and everything. I think there was some impact, but at the end of the day, it's not like it slowed anything down. Like things have been broadly fine in semiconductors since then.
Yeah, Stacy, there is a report out from the information, it looks like overnight, saying that China is asking tech giants to ditch NVIDIA chips and trying to, encouraging them to buy local instead. And going back to what you were saying, the escalation, the tit for tat, what exactly this could mean. Maybe it's not specific, or maybe it's not going to have a huge impact on NVIDIA's business. But I guess going back to what Brad was just saying, how we should be thinking about the escalation in the rhetoric.
So for NVIDIA, for that, I mean, NVIDIA already is barred from selling most of their stuff into China anyways. They do have some parts that they have made redesigned to constrain to the export restrictions that are legal to sell. The problem with those parts, unfortunately, is to fit them within the confines of the export controls, they have to really hamstring the performance. Because of that, the performance of some of the local Chinese stuff is actually better than the legal parts that NVIDIA is allowed to sell. And so because of that, it's likely that the Chinese are going to be buying more of the local parts anyways, with whether or not the government's mandating it or not. So again, I don't think there's a lot of direct impact. The issue, though, however, is the growth of these local ecosystems. So we are seeing Chinese companies that are starting to build AI chips. We're seeing Chinese companies that are, China's been really buying a lot of trailing older generation process manufacturing equipment. And they're building up a local older generation semiconductor ecosystem because we've shut them out of the leading edge. Most of this stuff, I don't think you'd want to do stuff like that. Huawei's making chips on really older generation process technology. You wouldn't want to do it if you didn't have to do it, but if you have no choice, you will do it. And I think that is the longer term risk is the U.S. By their actions, and I understand the
right.
The national security rationale to go after this, but we are forcing China to become creative, in all senses of that word. And you're gonna force them, drive them to find other solutions that maybe they would not have done in the past. And again, in 10 years, like we may have a much broader decoupling. China may develop, they're already developing local solutions which are not as good as what's available like in the rest of the world. But if you don't have any choice, you'll go ahead and you'll go down that path. And they are clearly going down that path.
Stacy Rasgon, who is the Bernstein Managing Director and Senior Analyst. Stacy, thanks for taking the time here today.
You bet.